Welcome to Markets Today. I'm your host, Mbithe Mwema. Today we'll just be going over what's happening on the equities, that is the Nairobi Securities Exchange, and also wrapping our heads around the fact that the budget has already been read. What does this mean for investments? And we'll also be touching on topical news that could possibly be affecting some of the stocks on the NSE this week. Before we start, I'll give you the statistics for yesterday's trading market, but in studio live via camera, we will be joined shortly by Churchill Ogutu. Churchill is a senior macroeconomist at Genghis Capital. Yesterday, market turnover was slightly lower than the previous day, closing at 473 million shillings traded. Safaricom was the top trade of the day, and it's now trading at about 30.5 to 31 shillings range. We also saw some interesting trades on Centum and also for the banks KCB and Equity Bank, as well as East African Breweries. East African Breweries closes its full year numbers the end of this month of June, and it's expected to announce its result on July 22nd or thereabout. This company has already issued a cautionary statement as far as these numbers are concerned, citing the fact that COVID-19 has been disastrous for its operations. The disastrous effect comes from the fact that there has been a curfew as well as closure of different county boundaries, and this has affected distribution from Nairobi to other areas as well as from their brewing plants to you as a consumer. Most of the beer that is consumed is actually consumed in bars. People are not consuming as much in their households, and this has caused the fact that the company has issued a cautionary statement. That said, once COVID started, it did touch a low of 139, but it has built up to 170 shillings per share. We continue to wait and see what announcements will come next month as it trades trade-bound at that level. Safaricom has touched a low of about 25 when the COVID pandemic started and hit Kenya, but it's been able to show some good recovery to the 30-31 shilling level. Earlier this week, there was a big announcement by Facebook. Facebook said it will be launching money payments through its WhatsApp platform, and it is testing this in Brazil. Is this going to be negative for Safaricom or not? It looks like at this point in time, it's negligent. Most people are still attracted to M-Pesa, and the use of it has become a brand carrier for Safaricom. The brand is well known, it's highly penetrated, and the usage and seamlessness of this usage has actually been an advantage for Safaricom and causing the stickiness of M-Pesa. We will get Churchill's views on this. He has published a note on it just to see if there's any impact on Safaricom. And thereafter, we will be taking a topical look to understand, now that the government has read its budget, what should we expect going forward? Welcome to the show, Churchill.
Thank you, Mbithe.
We can start off with your note on Safaricom. WhatsApp Pay vis-a-vis M-Pesa. What are your thoughts on this?
Broadly, we are seeing that this is a new player in the market, and of course, it's leveraging on the social media platform WhatsApp. That being said, we still see that there's still the brand loyalty on M-Pesa. So at the moment, we are still seeing that yes, they could be a threat in the long term, but in the near term, we actually seeing Safaricom coming in to take advantage of these incoming threats and coming up with some ways to bring on board all the people who are under the M-Pesa's ecosystem. So we think that broadly Safaricom will take advantage of it. The threat is still there, but it's still on the long haul of it, yeah.
Okay, interesting that you say that. We've also seen a couple of new product developments coming through from Safaricom. For instance, we are seeing it partnering with the local dailies to distribute things such as Nation or Business Daily for 20 shillings per share on its platform. Could this be another way of the company making money by using its platform and its network base of about 31 million consumers to actually distribute content online? Is that something that you see, and is there anything positive around that?
In our views, we are seeing that what we've been seeing, the model that has been employed traditionally by the media houses not only in Kenya but across the globe, that model has been usurped by the social media taking over. People can actually get news through WhatsApp, Facebook, other social media platforms. So this partnership, in our view, whereby you can be able to access the daily newspapers through the USSD code offered by Safaricom, you can get access to the six newspapers on a daily basis. So I think that's just trying to leverage the strength on Safaricom. So on the long haul, we can see it beneficial to the media companies, which have had some headwinds in terms of gaining access to the distribution channels, and now people can be able to get it at the top of a bottom. So that will be a win-win for both Safaricom, which is now enabling the media houses now to distribute their products. Yeah.
Maybe a final question for you, Churchill, on Safaricom. It's now trading at 30 to 31 shilling level. Do you think it's fairly priced, fully valued, or is there some upside? And what are you telling investors? Buy, hold, or sell this stock at this level?
Actually, now that you've mentioned our weekly cross asset weekly strategy note, we had a take profit on the levels around 30 shillings. That was at the beginning of this week. What we are seeing that it touched a high of 33 sometime in early this year before it went down to 23 levels. So at this prices, we are saying that this is where investors can now start taking opportunities. We are still not convinced that the products that are being launched could bear fruition in the long term. Remember that M-Pesa might have a knock because of the measures that are put in place by CBK. But that one is coming to an end of this month. So the fundamentals are still solid. It's not that we don't have that X factor to drive it forward. So our recommendation for this week was a take profit at the current levels, though we've seen that it started to pick up towards 30 to where it was recent high of 33 shillings per share. So we'll just keep an eye on that.
Very much for that. So sell Safaricom at above 30 shillings per share. Let's now take a different tangent and look at the budget. It was read last week. We were here with you just debating through the sentiments that came through. Now that we've had a bit of time to just go through the actual statements, what's your initial reaction to this budget? What does it really mean when you're looking at investments and when you're looking at the economy at large?
Thanks. Well, as has been stated by most of the people who have been commenting on the budget, is that the budget was prepared against the backdrop of COVID-19 pandemic. But despite that fact, despite that known risk element, we are saying that the budget is still forging forward as if there's no pandemic or we are still in normal times. So that's one of the things that has been pointed out in the budget. We are still carrying along as if things are still normal, and this is of course based on the macroeconomic fundamentals underlying the budget. We've seen that there's a V-shaped recovery in terms of where the growth is expected to be. Last year it was at 5.4%. This year is expected to be at 2.5%, though there's still some uncertainties where that will be hit, but we are seeing around a rough estimate of 2.5% or even below. And next year is expected to bounce back to 5.8%. So based on that estimate from Treasury, you could understand where there's a bit of some bullishness from their side in terms of when they are coming up with the budget. And another issue that came out is this is like the third year of the implementation of Big Four agenda. But drilling down into the budget, we're just saying it was around 128 billion allocation towards the Big Four agenda. But that is not just on the drivers, just in addition to some of the enablers, things to do with electricity connection, which, to be honest, is a bit hard to map in terms of the overall Big Four agendas. That's a story for another day. But that is representing around 7% of the total allocation towards the executive, towards the Big Four agenda. So yes, we have this 2030 blueprint out of which the third medium-term plan has been carved out of it towards the Big Four agenda. But so far, we've seen that we have punched below the weight in terms of hitting the Big Four agenda targets. And that is a concern even as we forge ahead into the next financial year, or until we hit 2022, where the medium-term plan 3 is expected to end. So broadly, we are saying that in terms of just to circle everything back, we have an overall of 3.2 trillion overall budget. Of course, expenditure and net lending is around 2.8 trillion, of which I can get that the government spending, be it to wages, operations, and maintenance, is around 10% of the budget of the GDP. What happens is on the demand side, the government spending part comes from the budget. So we can circle around 10% from the budget that was read will now go towards stimulating the economy, or will be part of the overall GDP. So that is it. But I still feel that the nominal GDP numbers are still optimistic at 11.3 trillion. That is around 700 billion increase from where we were in the current financial year, which is still a bit optimistic in the environment. So I still feel that the macroeconomic environment is quite fragile, based on my and based on just looking at the budget that was read last week.
Of the keywords that you're bringing out, it's a budget that is being made in light of the COVID pandemic, and it's also fragile, and there's a lot of optimism. I think we are used to the government being optimistic, and I think it's expected. You can be sort of the parent, and you're crying foul every day. Everybody's hope then dwindles. But the fact that this is usually a trend, what does that mean? Do we expect 1, 2, 3 supplementary budgets? Because really what I'm trying to get at is, you have a budget that's about 3.2 trillion in terms of expenditure. Will this become 4 trillion at the end of the year? How did it look like last year? So that if we're able to get that perspective, then we can go and look at how will this be funded. So where will taxes impact, and what's the read-through for investments? Maybe you can enlighten us on whether 3.2 is what we'll end at the end of the year, or will it be a different magnanimous number?
Just to look at the budget, I think vis-a-vis the supplementary budget, the second supplementary budget for the current financial year, there's a decrease of around 75 billion shillings. But the biggest increase on the budget has been on the public debt, whereby we've seen an increase of 162 billion from on the public debt, and broadly on the consolidated fund services. We've seen it skyrocket from around 768 billion, 865 billion rather, overall consolidated fund services, to 1 trillion. So that's an increase of around 160 billion. So that is, we are just paying, we are just now paying up for the sins of the past, because public debt are the obligations that we incurred previously. So now meeting them has now caught up with us. We are seeing that even the public debt obligations, both interest and pension and redemptions, has skyrocketed from 768 billion to 940 billion. So out of every 100 shillings that we collect in revenues, 55 shillings is going towards meeting the public debt obligation. So that is a big concern from where people are sitting at. So yes, broadly, I could expect that majorly the supplementary budgets will be on the allocations towards the national government, that is executive, judiciary, and parliament. That said, there's a recommendation that came out from National Assembly in this budget cycle, that any allocations towards the parliament and judiciary has to be ring fenced from any supplementary. So I could say that most of the supplementary cuts will be on the executive. The budget to the executive was around 1.887 trillion in the next financial year. So that's where most of the fat will be cut from as we look at the supplementary. But having said that, what usually I find it quite perplexing is that yes, we have an allocations towards the development spending. We're looking at around 635 billion in the next financial year. But what happens is, at least the experience in the last two financial years has been that first month in the financial year, that's on the July, in the month of July, we see that Treasury or puts out a circular that there's a moratorium on any capital expenditure. That is a concern. So what you see is that the first 2 months there's no allocations to our development spending, and that has been the trend. Whereby currently 2 months towards the end of the financial year, we're seeing that the absorption rate for development expenditure is quite subpar. I think it's around 60% vis-a-vis an ideal 83% as at the end of the month of April. So that is also another concern that yes, we have these big budgets, but the absorption rate has been quite low. So on the flip side of it, it just tells us that there is much that can be done in terms of cutting our coat according to size. That we don't have to go all the way to have a 1.88 trillion budget towards expenditure, but yet we don't. The absorption rate is quite slow, or there's some stall projects, or there any teething issues that comes in terms of implementation of the budget. But that said, I still expect supplementary budgets to be forthcoming in the fiscal year.
That you've said 55 shillings out of every 100 raised is going into debt. I'll come back to that conversation. But before that, you're saying that this budget 3.2 is really not being absorbed fully, and you end up getting to the end of the year where some projects have not been executed. Can you break it down for us? Where is the majority of this 3.2 expected to be spent? And what has been the track record in terms of absorption of that allocation? Or are we overstating our budget?
Thanks, Mbide. A significant chunk of that is going towards education, is around 400 billion. We have Teacher Service Commission, which is the biggest public service employer, has around 265 billion shillings allocation. We have allocations towards university education. That's another a figure around 116 billion shillings thereabout. We have now for the basic educations, whereby this that free education, there's capitation, what's called capitation, whereby for each and every student in high school, there's I think 22,000 shillings disbursed by the government towards their education. So all that counts to around the education of education allocation to around 400 billion shillings. Followed by we are seeing things to do with the infrastructure, another 189 billion. Though this has been scaled down from close to around 234 billion in the last financial year. So we're seeing that a bit of some scaling down on infrastructure, majorly to do with the completion of the SGR phase 2A, but we don't see any prospect of that last mile from now Naivasha to Kisumu and all the way to Malaba. So there's that element of now refurbishing the existing railway line rather than now extending the SGR from now Naivasha all the way to Uganda. So that has been put on hold. So it explains even the reduction in the infrastructure. That said, for sector like health, it's around 112 billion shillings, of which universal health coverage is around 50 billion. But remember that we are in COVID-19 pandemic. So I'd expected that a significant chunk of that will be towards tackling the pandemic, be it the PPEs, be it the ventilators, or any other thing to tackle the COVID-19 pandemic. But what we've seen, and just from the snippets from the economic stimulus package that was also announced, I could just pick out 1.7 billion shillings allocations towards tackling COVID-19 pandemic. So that's around 2% of the allocations towards economic stimulus package. And if I just look at the 3.2 billion, that's around, it's a drop in the ocean. But that said, my sense is that the allocation or any funding towards tackling COVID-19 pandemic has been left towards the COVID-19 emergency response fund. This is separate from the health issues, and this is where you and I and everyone else is contributing towards it. And that's also where Budget Appropriation Committee came up and said that they need to have an oversight on that, on the use of funds. Remember 2 months ago, whereby there was the World Bank project that was being funded, and then there was cases of misappropriation of funds. So they wouldn't want such a case to happen with this COVID-19 emergency response fund. So they really came out strongly in one of the recommendations that there needs to be an oversight in how the proceeds on use of funds from these funds will be done in the next fiscal year.
Stability is expected. All right. Churchill, we'll just take a short break. Then when we come back, we can delve into public debt briefly. And then I'd like us to just take an overview and look at the different investment classes, fixed income vis-a-vis equities. We take a short break. When we come back, we will be discussing public debt and the impact of the budget on different investment classes. We really want to hear your thoughts on this. Does this budget represent your needs? Do you even care for what the budget reads? And for you to understand it, how would you like the information broken down for you? You can reach us on SMS, that's 20146. You could also reach us on our social media platforms. That's either Metropole TV or at Mbithemwema. We take a short break. We will be back shortly.